say there's two things. One, there's been a change in policy stance. That's all there is to it. You have to, either accept it or get out of the way. And so, I have, there's no, I'm not, I have never been a bear or a bull, right? It's dependent upon the circumstances and dependent upon the market pricing. And so this is a good example of that, where people who got entrenched in one view or another, have not, really the realities haven't done well over the course of the last 2 years. Neither bulls nor bears have done well over the last 2 years. The people who have done well have been flexible and responsive to the dynamics at play. Now, the thing I would say in terms of being a bear, you can make me the biggest bear on bonds and on short rates. Now, that's a different conversation. But stocks, the U.S. economy is doing pretty well. And if anything, we just got a big easing cycle, a big easing injection over the course of the last the last 2 months. And for all the recession doomers out there, like a strong economy getting 100 basis points of yield easing and stocks up, 10 or 15%, like that's not like the fast path to recession. That's not how it works.
Yeah, that's fair. I was looking back, and you were also sort of adamant about that the market was pricing in 25% earnings growth in 2024 and 2025. And that was sort of your reason to be cautious, if you will. But monetary trumps EPS, is that the message?
That's for sure. Monetary conditions trump EPS, absolutely. And I think there's also, interestingly, right now, a flows dynamic, which is particularly advantageous on a forward-looking basis for stocks relative to bonds, because stocks have been depressed, haven't actually been as responsive to this easing as you'd normally expect, because there's been a big rebalancing dynamic in the market. If you look back through the course of this year, obviously long end bonds are down a lot relative to stocks. What happens if you're a big institutional investor? You have asset allocation targets, is you have to sell your stocks and buy your bonds in order to bring your bond allocation up by the end of the year. That is a big negative pressure on stocks relative to bonds that is flowing through right now. But there will be a point, looks like it might even start kind of this weekish, where that pressure is going to start to fade, right? Which is going to lead to more buoyancy in stocks relative to bonds.